folks, Dan Frio here with your real estate news for September 5th, 2025. So this was the news that we were all waiting for, the unemployment numbers. Well, all I'm going to do is do this. Well, it looked like they came in pretty bad, doesn't it? Because the mortgage rates are plummeting right now. We got the stock market plummeting as well. So let's get over. First thing I want to go over is how those numbers came in. But I have a precursor. Last night, if you watched last night's video that I'll put up right through here to prove it, we started doing some analysis. And we did this with another number a couple weeks ago. I started building an AI system to feed into the data because I don't like ADP's payroll numbers. I don't like the government numbers because we had that 250,000 debacle the last reading. So I'm saying, okay, can I do a little bit better? So here's what I did. I've been building models in the background. And if you watched last night's video, here's what we predicted for today. The unemployment rate in August of 2025. Now, the previous number was 4.2. Bloomberg called a 4.3. But most of Wall Street, most of the economists were calling for a 4.2 unemployment rate. So I ran all this analytics, and here's what it came out. The rate update forecast came in at 4.3% unemployment rate. Well, that's what we got today, folks. So let's get over to Rick Santelli, but I want to show you this. Is it concerning? Should we be kind of freaking out over this? Let's get over to Rick. Let's see what he has to say for it. Then we're going to come back. I'm going to show you what my prediction was, where it came in at, and mortgage rates are loving this, folks. So without further ado, Rick, take it away for me, buddy.
We are just a few seconds away from that August employment number. Rick Santelli is standing by. He's been watching all of this as we get ready to go to this number. Rick, we're going to send it over to you.
Wow, and the data is actually coming across the wires on time. Good job, BLS. Change in non-farm payrolls for the August jobs report, 22,000. 22,000. Interest rates started dropping long before this data was released. And last month, a subtle revision to 79,000. And if you look at the 2-month revision, thank goodness it's not minus 258,000 like it was last month. Comes out to minus 21,000. Of everybody, of course, is trying to find out what's going on with the unemployment rate. We'll do that next. The unemployment rate comes in at, comes in at 4.3. 4.3. So it moved higher. Now, here's something interesting. What's the comp? We haven't had a rate that high going all the way back to 2021 when it was 4.5. So you could see that the way it dropped really was quite incredible. We went from 4.2 to 4.5 in November-October period of 2021. Now, let's go at average hourly earnings up 0.3. Very solid. Very much as expected. If we look at year over year, 3.7, losing some steam. 3.8 was expected. 3.9 was in the rearview mirror. So 3.7, that would definitely take us back also to mid-2021 to find a comp there. Hours worked. Many people are counting on this to give them some early clues, thinking hours are going to drop a bit before people potentially get fired. There's two ways to look at it. Maybe you give your remaining people more hours before you hire people. I think it could go either way. It comes in at 34.2. That would be the second lowest of the year. We've had several. 34.1 is where we started the year. So 34.2, kind of figures right in there. And finally, let's look at some of the other numbers we like to pay very close attention to. If we look at the labor force participation rate, and this has not been a good thing. It really has been moving down. We were at 62.6 at the beginning of the year. We're now at 62.3. That's 1/10 better than expected, 1/10 better than the rearview mirror, equals where we were in June. To find a higher one, you have to go to May at 62.4. As I said, it's been steadily moving lower. And finally, we go from 4.3, which is known as U3, the unemployment rate, to U6, which is called the underemployment rate. That zoomed up here also to 8.1%. 8.1% would be the high of the year. Matter of fact, once again, where are we going to find a comp? We're going to the fall of 2021.
Interest rates are going down. So let's get over. This was just posted, and this wasn't here when I was prepping for my video. We're going to go over to Diane Olick over at CNBC. Let her give us where the rates are going right now. Rates are going crazy right now, folks. If you're looking at government loans, you're looking in the 5% ranges now. So let's get over to Diane. This is just breaking news, folks. I just saw this. So let's bring up Diane, see what she has to say over at CNBC about mortgage rates.
We got a big reaction from the mortgage market to today's jobs report. Let's get to Diana Olick with the very latest on that. Diana.
Melissa, this is the biggest one-day drop in rates since August of last year. The average on the 30-year fix dropped 16 basis points this morning to 6.29%. That according to Mortgage News Daily. And that is the lowest rate since October 3rd of last year. So we're finally breaking out of this high 6% range that it's been in for many months. Mortgage News Daily's Matt Graham also says many lenders are priced better than this at rates of 6.125%, and many lenders will be quoting in the high fives today. So it's a major difference from May when that rate went over 7%.
So let's stop there, though. But we're not out of the woods just yet because let's go over to here. And here's what the Federal Reserve is going to do. They're going to meet in 12 days. Well, their focus is on right through here. They control the federal funds rate, which I think should be about 3%. So we'll get to that at some other time. So there's a lot of movement that should be taken out of here. But here's the data that they're looking at. They have inflation at 2.6, and still it's above their 2% target rate. But it's still pretty darn good. They have the unemployment rate at 4.3. This was just updated. Anything under 5 is full employment. And we have GDP at a 3.3. So that's fantastic news. But here's what we got to focus in on next week. So here's the data that we had today. I'm just going to re-verify what Rick said, just so you can see it kind of numerically. Average hour earnings, last reading was 3.9. It was supposed to come in at 3.7. It came in at 3.7. Average hour earnings up 0.3 all the way across the board. Here's where that number is. Non-farm payroll. Last reading was 79,000. It was supposed to come in at 75,000. Came in at 22,000. That's terrible. Okay, so that's helping the market quite a bit. But let's go to next week. And this is what I want to focus in on. Next week, we're going to start getting inflation numbers. We're going to get it on the producer side. This is going to give us producer inflation on Wednesday. And I'm going to do my AI research, and I'm going to go back to that in a second on what we called on the unemployment rate. But I'm going to run some numbers to see how the PPI number should come in this time. This is producer inflation. This is where the tariffs are really going to start hitting first. Okay, so then as we're going to get that number on Wednesday, it's going to float down. And then on Thursday, we're going to get the consumer inflation. We're going to get a lot of numbers. You're going to get what's called the core month over month, you're going to get the core year over year, and then you're going to get CPI in general. It's going to give us the trends. What are the month over month trends? What's year over year trends looking like? This is where the inflation numbers that you and I pay attention to. The Federal Reserve, they look at the PCE. That came in last week, and it was 1 point elevated from the previous reading. So it is ticking up as well. So we have the unemployment numbers looking pretty dismal right now, and we have inflation a little bit higher than expected. This is going to put some dilemma on the Federal Reserve because now, next week, let's say inflation really starts coming here, starts coming in a little higher than expected. Well, the Federal Reserve's now, okay, we're going to cut rates into a higher inflationary environment. They got two mandates. One was full employment, which we are. And the other one is inflation, or AKA price stability. That's the kind of curveball that we're seeing here. Do I think the Federal Reserve is going to cut rates at the next meeting? Absolutely. But let's get over to see what the market's looking like. So in 12 days, actually, the Federal Reserve is going to meet. What are they going to do? Well, based on this estimate, right down through here, here's what we're going to see. Let's look at the probabilities. And now across the board, here's where the federal funds rate are actually listed. And it goes all the way down to 1.75. We're right now at 4.25 to 4.5. It's not even on the board. Okay, so at the next meeting on 9/17, there's a 90 or an 88% chance, only an 88% chance now they're going to cut rates to 4 to 4.25. That's a 0.25% cut from where we are right now at 4.25 to 4.5. Okay, so but now I said, well, it's only this. Now they're starting to be percentages even lower than that. So could the Federal Reserve actually come out and cut 50 basis points? I don't think so, but it's starting to get on the charts right now. There's 11 or 12% chance of that. So my expectations are this. They're going to cut rates at the next meeting. But here's what happened. Here's what I want you to learn. Remember Diana Olick just said that this is the same thing that happened last August. What happened in September? Okay, we had the lowest rates in last August. September came, the numbers were kind of the same. The Federal Reserve came in, cut rates 50 basis points. They saw inflation tick up, and then mortgage rates spiked. Don't miss out again. So let me give you some advice if you're out there looking to buy or refinance, because if you're watching this video, that's most likely why you're here. So folks, let me explain to you who I am and what I do. I'm actually a federally licensed mortgage loan officer. So I've been doing this for over 35 years. I'd love to be able to work for you, and I can, because I'm licensed in all 50 states as well as Puerto Rico, because I work at a bank that's basically federally licensed. But the unique thing here about us is we're also a large, I'll say it, brokerage. We're not a brokerage because we're a bank. But what we've done is me and my colleagues joined this bank and we're helped building it. And here's what we're trying to do for you guys. We're trying to make it an easy experience. So what we want to do is make sure when you call us, we're giving you a great experience. Plus, we're giving you probably the best, lowest rates and the lowest mortgage fees in the industry. How do you can prove it? Well, here, let's do this. Let's check out my website. We have a slogan here, and this is my slogan that I created. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? We have 30 lenders that we work with. Okay, so we can facilitate this loan right through here. Just like a broker, one application, one credit pool, you're going to work with me throughout this whole transaction. We're going to offer you programs like this. Down payment assistance. But before you take any down payment assistance, what I want you to understand is the ramifications that you might face when you go to refinance. So here's what a lot of people are facing right now. Let's say you bought a house last year at this time. Rates were about 7%. 2 years ago in 2023, rates were at 8%. So let's say you bought at 8%, you took a down payment assistance loan. Now rates are at 6.25%. And you're like, I can't miss out this time. So now you look to refinance, but you took that down payment assistance loan. It wasn't free, wasn't a grant. You have to pay it back. So what's going to happen is when you go to refinance, you're going to get stuck because here's what's going to happen. Unless you put down enough money, which you probably didn't, you're going to owe the balance that you had. You probably put 3, maybe 4 or 5% down, but then you got that down payment assistance loan for $10,000, $15,000, $20,000. Well, if it's not forgivable, when you refinance, you have to pay it off or include it in the loan. Most people don't have the equity. And when you include $10,000, $15,000, $20,000 on top of your other mortgage, it makes the payment basically higher than it should be anyways. So if you're looking for down payment assistance, please check out this loan right through here. This is giving you up to $7,000. It's not a loan. It's no payback required. And so when you go to refinance, really simple. But if you're out there and you're like, Dan, I keep missing it. So how do you go in this time and say, okay, Dan, here's the rate I want. When it hits there, I want you to reach out to me. Let me know what the fees are, what the payment is, what my break even is, and everything works out. We'll get the paperwork started and locked in. So how do you do that? Well, hit the refinance button. This is going to give you the opportunity to give me your mortgage information and let me know what rate you want to refinance. Well, let's say you already did that hard work and you got 2, 3, 4 loan estimates, and now you're trying to compare them. Who's got the lowest rate and the lowest fees? Here's what I'm going to challenge you to do. Pick the best one. Then call that lender and say, is this your best effort? And they're going to say yes. So then you're going to send it to me. Okay, here's what we're going to do. Here's what I want you to promise me. If we can beat them on the rate and the fees, both of those, I want to win you as a customer. So upload your best loan estimate into this right through here. I'll do a personalized video right back to you, letting you know what your new payment would be, what your rate would be, what your cost would be, your break-even point. And again, if we can beat them on the rate and the fees, hoping to win you as a client because you're going to save a lot of money. So that's it for today, folks. I will not be doing my closing bell. I just got back in town in Chicago. I'm trying to play catch up right now, but hopefully you learned today why these are changing, but don't look a gift horse in the mouth, folks, because we got major data coming in next week on the inflation numbers, and it could push these rates right back up to 6.5%. So lock in now before rates change. If you want to reach out to us, please go to therateupdate.com. You can give us a call. You can put in your application. There's a whole bunch of information here to help you get contacted with us so we can help you out. So thanks for watching, folks. God bless. Have a fantastic day. Have a great weekend. I'll see you back here Monday morning, first thing at the opening bell. Take care, folks. Bye-bye.